Good morning, everybody. It's Wednesday, April 9th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at May corn up 2 3/4 at 471 3/4. May soybeans are up 2 at 994 3/4, and May Chicago wheat was up 4 3/4 at 544 3/4. This morning we had an export sales announcement from the USDA, 198,000 soybeans to unknown destinations for 24-25. Also announced earlier this morning, China has increased the retaliatory tariffs from 34% up to 84%. That is supposed to be effective April 10th. The Dow was sharply lower here earlier this morning. We have since rallied a little bit. We're down 380 right now. S&Ps are off about 3. Bonds are down 2 handles. We got USDA report out tomorrow. So we'll get WASD there. And we'll talk a little bit about that here this morning. So I guess, Justin, we were talking before the show, it feels like, Main Street, Wall Street, everybody is looking for a path here. They're looking for guidance. They're looking for some semblance of an end game, and patients are waning. So what's on your mind here this morning?
Yeah, I think that's right. I think, we have to start getting some much clearer path here very soon. It's got a lot of these, if you take everything verbatim, right, it's hugely crippling to a lot of U.S. businesses that, transact overseas, transact everywhere. A lot of, every country's getting hit, right? I mean, obviously China's the most dramatic one, but a lot of U.S. countries have diversified over the past 5-6 years away from China into other countries, right, to try to spread that risk of the, China-U.S. trade war. And now those other countries are getting hit, right? So without a clear path of like, what is the end game? What does this look like? At this point, you're just hurting a bunch of U.S. businesses at the same time. And a lot of my opinion, a lot of, who I would kind of respect on his team, the Musks, Besant, Ludnick, some of these guys that are, they're smart businessmen, whether you like them or not. They can't be just for, slaughtering American companies, right? Just penalizing them for something that was just a policy. So I think there's going to be you've already started seeing it with, Musk and Navarro yesterday. So I think there's going to have to be some resolution here pretty quick before you start losing some constituents, in my opinion.
Yeah. Well, and it, no surprise to see, corn open interest over the last couple of sessions down pretty dramatically, down 65,000, almost 30,000 in soybeans. I think your point was well taken. It's like, yeah, I get it. Like, what are you supposed to do?
I mean, volatility is, when you get crazy volatility outside of, algos and professional traders that enjoy that kind of stuff, the average person does not, right? And so if you don't know what to do, you just get out and get on the sidelines. So I think there's a ton of that right now. I mean, look at the rate of the break in the equities, the trillions of dollars. That's people taking money out, getting on the sidelines, trying to see how this is all going to play out. So I think the sooner the better, obviously. I mean, it's a super obvious statement. Sooner the better you get just a path, whatever way it is, just to have a known. You have a lot of money coming back in the markets. Which way that's to be seen in which market, but I think that's where we're at personally.
Yeah. Dustin, July D's telling us anything about tomorrow's report, or giving us a little bit of a precursor to maybe looking at a stocks reduction? And what are your thoughts going into today?
Yeah, I mean, tomorrow's report is just going to be, the WASD estimates. So we had that stocks report March 31st, and they'll make some implied outcomes of that. Well, I think that the big thing with spreads in general is that we compete more heavily into the future with Brazil. And so when you get things like, the last 3 sessions, the real is down 6.5%, which is just an insane move for a major currency. If you go and equate that to let's just say, what have beans done in the last 3 sessions? They're down, 18 3/4 cents. in US dollar terms, if you just convert it back to real, they're actually up 50 cents, right? Same thing for corn. I mean, corn's up 11 cents in that time frame. It's actually up 44 cents in real, right? If you're doing a real conversion. So I think that there's a bigger thing that's happening in the currency markets. People are moving away from emerging market currencies. It's more so the real than anything. It's not like the yen, the euro. Those have been fairly subdued in the last couple of days. But our largest competition is able to compete more effectively when they get a currency break like they have. They become more willing sellers. And that's also, I think, it's going to show up in things in ways you don't expect, like the corn bean ratio dropping to new lows. We actually have a greater competition with a major South American bean crop that they just harvested, and their corn is really kind of at its end point here until you get to new crop harvest. So it's not surprising to see things like July corn outpace July beans in a situation like this. So I think there's a bigger thing going on for currencies that is definitely a big headwind. We talked about it yesterday. If we continue to see emerging market currencies move like this, then that's something that's going to prevent us from rebounding, in my opinion.
Ben, what's on your mind this morning?
Just third day of the Goldman roll, and that was pretty interesting watching the May July spread yesterday. Felt like someone really wanted to be out. Kind of atypical to watch those spreads tighten during this time frame, especially in the first, up to day 4. I think you can really cloud a lot of things outside of just the grain sector. But if we put on our blinders and earmuffs and look at grains, old crop corn looks okay. We failed here 2 previous times in the last month, trying to push through the 100-day. Certainly a report tomorrow and options expiration. I would be shocked if May corn was able to sustain anything above 480, but you don't know in times like these. So if I'm just looking at grains right now, I feel like corn looks pretty good. I think weed's trying again to put something together. And, we know about the decline in beans, but all things considered, it's not been super, super harsh now. We're not just continuing to bleed it out. So I think a lot of this trade war stuff was baked in. And I think someone mentioned that on here yesterday. And that might be an explanation also for some of the reduction in open interest, that people got short ahead of it, probably maybe a little too much, and there wasn't a humongous payday in corn, and they started culling. So,
Jace, did you have something to add there?
No, I guess I was thinking about Dustin's comment about the weakening of the currency, right? Of the real. And I just, I question it, right? In this environment with what's going on with the trade war and how that could be different. Like, I think Dustin's point is status quo. It's definitely a headwind, but I'm just curious, like, there's so much unknowns with, what's going on in global trade. If there is some kind of deal for the U.S., regardless of what currencies are doing, it was more of a thought, and I don't have an opinion on it, to be honest. Like I said, obviously status quo. If we're competing against a weaker currency, it's harder for our exports. But I just question that in this environment. I don't know if you guys have an opinion on that. Like, could we see something, when we're competing directly with South America, let's say this summer on corn exports, and we are getting undercut by a weak currency? Do you think there might be something where there's, part of a trade deal where importers come to the U.S. Regardless of what currencies are doing?
Well, yeah, if that buys them something, right? If our main goal is, eliminate the trade deficit at all costs, it's like, yeah, I'll spend $10 billion in U.S. ag goods rather than going to South America, even if that costs me an extra 10%, an extra $1 billion. If that buys me $5 billion of, reduced export tariff risk.
Right.
Like, I think that's what phase 1 trade deal felt like to me, is like, if you can just get past increases for a year, that there's a value to that. So I don't disagree, Jason. Like there could be some sort of underlying deal that is non-economical, really, from a trade standpoint. Like it's a buy from the U.S. and that's the cost of doing business to avoid tariffs.
Well, and look at you know, the Chinese currency hitting all-time lows, right? Like they're devaluing their currency to try to offset this, you know, offset these tariffs, make it cheaper for other buyers, right? So if you were to do that, like the real is could collapse. Like there's such a export country, right? They're so dependent on ag exports is huge for their GDP, right? So if you were to do some of these, just call it non-free trade or whatever you want to call it, where Europe, some of these countries cut a deal to buy these things, like call it uneconomically, like those currencies will really take a hit, right? I mean, at the end of the day, the U.S. is the big buyer of Chinese goods, you know, of their economy. So they've got to do some major things. You know, we're all whining here and it's not good, but it's hurting a lot of other countries just as bad or worse. Like this is not a good thing for China. It's a bad timing for China with, you know, their economy already being kind of weak, the demographic issues that they have. So they've got to make some hard decisions too. Are they going to start injecting trillions of dollars in their economy? It's not a good scenario for any country right now. So you hope that, you know, cooler heads prevail and figure out, okay, like we got to cut some deals and figure some things out. So I mean, that's obviously hope, and I think it's going to have to happen sooner than later because credit markets will start to break, right? Bonds, all sorts of things that are intertwined will start to happen if you don't figure out some stuff soon.
Well, this and as it relates to the currencies, I mean, this administration has made no qualms about it that it's the negotiation is not only tariffs; it is currency manipulation. He's been very clear. You know, the games have to stop, and you know. So
yeah, I think it's clear or not clear, right? Like they said a lot of things too, you know. So you know, I think there has to be a much more clear message, you know, and maybe that's what, you know, these 70 countries that are negotiating, you know, that they come out and then people get an idea of what that first negotiation looks like.
Yeah, framework.
I know I'd feel better about it. You know, take Europe, Canada, Mexico, Japan, right? In South Korea, like those top 5, get some deals done and see what those look like. The market will feel a lot better with what kind of trying to get in my opinion, get an idea what that goal really is, because you can't overnight make every country not have a trade deficit. Like it's not possible.
Yeah, well, I would think one of the big ones too is, right, do not let China circumvent the tariffs with the United States by using your country.
Right.
Like
Don't
that's why we
deal,
tariffed everybody.
Right.
And I think
and
that
needs to be more clear. You know, I was watching a good podcast, and like a lot of these, like the border, some of these things have been done really well. They've come out with like really good stacks, Doge, even like statistics, like transparency. And then I think the tariff one just looks like, you know, come up with a chart with a bunch of tariff numbers, and obviously people jump to islands with penguins, and it just hasn't been a very clear, concise message of what the goal is. And maybe that's the plan. You would hope that it's to try to confuse people, but at the same time that can only last for so long because it's too tied to these, you know, international markets and U.S. businesses, right? It's not like, I mean, it's right now there's a ton of U.S. businesses that are, you know, penciling in hundreds of millions or billions of costs that they can't pass on.
Yeah.
Right. So
yeah. Well, yeah, it's going to be a slow, right? I mean, you need flow of dollars going everywhere. Otherwise, it's just everything's going to tighten up. Yeah, to your point, you know, Justin, you got friends that are U.S. businesses that do imports from other countries. I got buddies, and everybody's having this conversation in their own war rooms, right? Trying to figure out, you know, who they're going to have to lay off, right? Or how they're, you know, what are they going to do, right? Because a lot. The problem is they can't physically get these things in from somewhere else, right? There isn't a supplier that isn't going to be tariffed, right? There isn't a supplier in the U.S. and everybody's getting tariffed. So you do the back of the envelope math, and like we're going to lose this, amount of money unless we do X, right? Which is
Right.
we got to lay off a bunch of people.
Right, and there has to be, there has to be some offset for these companies. Like if this, if you're going to incur this, here's how we're going to make it good on this end for you to offset that, invest here. Like there's none of that yet, right? So right now, all you have to go on is I'm going to lose this much money, right? So that's why I'm saying that it's got to be soon that clarity comes out, because then you will start seeing dramatic things start to happen.
Well, 100% too, because you got companies that are now, I mean, if they've released their forward guidance, they're having to go back to Wall Street and say that I don't know that I can even consider that my forward guidance because this has completely changed the game. And
Yeah.
and that's, it's confusing.
Well, and just, I was watching a really good thing on a lot of these businesses, call it small, medium. Their lines of credit are based on like projected cash flow, projected returns, right? So if those go negative, like all of a sudden you could get into a credit squeeze with a lot of businesses. So there's tons of rippling compounding effects on this. If you don't have, well, just take ag, right? If you're going to a bank and you're like, I'm going to lose $500 an acre, well, I can't give you the loan, right? So if you have companies that are doing a bunch of business overseas and you're like, I'm going to lose $100 million this year, you don't get the credit, right?
Yeah, not my money. Yeah.
Well, it's just, that's the problem, right?
Well, plus everybody's scared. Everybody's risk adverse, right? It's like a compounding problem, right? It's like we need the money right now, and everybody's scared to loan it anyway. And then if you're showing them a loss, it's like, well,
if it happens to everybody at the same time, banks are like, well, everyone's in this situation, we got to cut back. So that's what you have to avoid, and you got to do it soon.
Yeah. Agreed.
Very good. Rye, real quick on the livestock side, continued liquidation in cattle down 12,000, and hogs just pretty much tracking equities at this point, and obviously with this new China news. So what are your thoughts this morning?
Yeah, I think just after this latest round of retaliation, the question's going to be how long does this last and how much worse can it get, really? We've seen a ton of liquidation. I mean, I think that's the big question mark, and that's the big fear right now is everything just going to zero? Are the funds going to continue to liquidate? The specs just going to bail out of everything? Is there going to be no bottom to this? Are there going to be no more negotiations? So still at this point, too many questions, right? So I think we're still in this risk off mode. I mean, we have seen a little bit more on the fundamental side start to pick up. Like we were saying yesterday, I expected to see some low ball trade. So we saw a little bit in the north, but really have yet to see the bulk. Obviously, like we're getting in some we're potentially getting into bear market territory with, hog market cresting on new contract lows. So, I mean, it's an ugly situation. And like I said, how much worse can it get from here? You would expect that the pressure is on both sides to really start negotiating hard. I'd expect better news to kind of come out now from the headlines at this point. So I don't know if, for good or for bad, I think the market just wants some semblance of certainty, because right now it's just numbers on top of numbers. So no, just waiting for the headline trade to kind of clear out a little bit. But honestly, the fundamental picture hasn't been that bad. Cash prices on the hog side were up. I mean, naturally saw a little bit of weakness in cutout. Bellies were down $4, hams down $7. But overall, I mean, the cash trade was up a little bit. So this is something that neither side wants. So I think it's time negotiations are probably going to start pretty quick.
Hey, Rylan, is it true? Is it record meat imports right now from Brazil?
Yeah, I mean, like it's been really active this year. I mean, like it's just for the sheer fact, I think that's really the one thing is kind of keeping beef prices a lot lower, for the most part. So we've been really importing heavily, and obviously, a lot of people have a problem with this naturally, but on the other hand, without those kind of things, you get to a point where
There's not
beef
enough.
prices could just become unaffordable, or at least really it could drag down volume quite a bit. And then like with China kind of does this in our markets, right? Like their hog herd has been kind of decreasing slightly, and so they're obviously they've been importing our pork into their markets. So I mean, like there's a balance going on here with herd size and margins. So I mean, I don't know where the dust really settles, to be honest. There's too many questions. But like, the import-export trade in the meats is vital to a lot of different industries in a lot of different countries right now. But obviously, this between the U.S. and China is going to be in the forefront. So like I said, it's just how much worse can it get now? We're just going to keep on putting tariffs on top of tariffs. It just at some point you have to think it's just getting ridiculous.
All right, very good. Appreciate the update there, Rye. Again, we will have WASD out tomorrow morning, 11 o'clock Central. Also, tomorrow morning, weekly export sales. We'll take a look there, visit about those in the war room. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like, certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks again to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. We will do one more rundown here real quick before I forget. May corn up a penny, 470 is the last. May soybeans up 3, 9.95 3/4. And May Chicago wheat's down a half, 539.5. The Dow's down 187. Again, hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.